Hey folks, welcome back to the channel. Let's not sugarcoat it. Everything's getting more expensive. Again. Whether you're trying to fill your gas tank, stock your fridge, or replace that old phone, it feels like the price of everything just jumped overnight. And here's the kicker. It's not just inflation anymore. This time, we're facing a triple threat. New tariffs on foreign imports, major chaos in the crypto world, and global supply chain issues that are once again under pressure from war, climate disasters, and political tension. In this video, we're going to break it all down. We'll explain why prices are surging again, who's behind it, who benefits from it, and what you can actually do to protect your wallet. Let's get into it. Tariffs, the hidden tax you're paying. Let's start with tariffs, because that's one of the biggest drivers behind the recent price hikes. In May 2025, the US government rolled out a new wave of tariffs targeting goods imported from China. The most dramatic of these was a 100% tariff on electric vehicles, up from the previous 25%. But it doesn't stop there. Tariffs also doubled on key components like lithium-ion batteries, semiconductors, and solar cells. That means products ranging from your next electric car to the solar panels on your roof, or even the phone charger you just bought, are all about to get a lot more expensive. Now, it's important to understand how tariffs work. They're basically taxes on imported goods. Companies that import these products now have to pay more to get them into the country. And while the idea is to protect American industry, most companies aren't going to just absorb those costs. They're going to pass them straight to the consumer. According to the Tax Foundation, American consumers end up covering more than 90% of the cost of tariffs. So while the policy may be aimed at China, it's hitting your bank account directly. Over the next year, economists estimate these tariffs could add over $30 billion in extra costs for U.S. consumers. And if you run a small business that relies on imported tools or parts, you're in even deeper trouble. This isn't just about politics, it's about price tags. Crypto volatility. When digital chaos hits the real. Next, let's talk crypto. Even if you don't own Bitcoin or Ethereum, the wild swings in crypto markets are affecting the broader economy in real, tangible ways. In early 2025, a wave of regulatory crackdowns hit the crypto space. The SEC filed lawsuits against several major exchanges for alleged securities violations, which sent shockwaves through the entire sector. Bitcoin's value dropped nearly 30% in just 2 weeks, wiping out billions in investor wealth. Ethereum and other major coins also took a nosedive. Now, this might seem like a niche issue, but crypto is no longer just a sideshow. Over the last few years, crypto has become deeply embedded in global finance. Venture capital funds, hedge funds, even traditional pension funds have invested heavily in digital assets. So when the market crashes, that fear and uncertainty ripple outward. Investors get skittish. Startups lose funding. Tech layoffs increase. People spend less. It's a domino effect. And eventually, it reaches the average consumer. And it's not just price crashes. In the first quarter of 2025, more than $1.2 billion was stolen from crypto wallets and DeFi platforms through scams and hacks. These incidents shake public confidence, disrupt financial ecosystems, and make businesses more cautious. That caution slows down investment, production, and development. And when supply slows down but demand stays high, prices go up again. Global chaos, the new normal for supply chains. Now we come to the global situation, and it's messy. Between armed conflict, trade wars, and climate-related disasters, the world's supply chains are in a constant state of strain. The war in Ukraine is still ongoing, which continues to block grain shipments and disrupt agricultural exports. That's led to spikes in the price of wheat, corn, and sunflower oil, especially in Europe and Africa. But the effects reach everywhere. Meanwhile, rising tensions in the South China Sea have forced some shipping routes to be rerouted or paused altogether. Military activity in key areas like the Taiwan Strait makes it harder and more expensive to transport goods. The Red Sea, another major shipping corridor, has seen attacks on cargo vessels that pushed insurance costs through the roof. As a result, companies are rerouting through longer, costlier paths, like going around the Cape of Good Hope instead of through the Suez Canal. That adds both time and money to the supply chain. Then there's the weather. Droughts in Brazil and Argentina have severely cut down soybean and coffee production. Floods in Southeast Asia have wrecked rice crops. These disruptions are driving up food costs around the globe. In one case, a cyber attack on a major port operator in Rotterdam caused a backlog of over 12,000 containers and delayed shipments for weeks. Events like these throw entire industries off schedule, and prices reflect that delay almost instantly. And even when supply stabilizes, prices don't always go back down. Companies often anchor them higher and keep the margin. Why you feel like you're falling behind. Here's the part that really stings. Even though average wages are technically going up, it still feels like you're falling behind. That's because real wage growth, the amount your income increases after adjusting for inflation, is basically flat. In 2025, wages in the US rose around 4.1%, but the cost of living increased by 4.6%. That means your paycheck might be bigger, but your purchasing power is smaller. And when you look at where prices are rising the fastest, housing, insurance, healthcare, groceries, it's all in the essentials. These aren't luxuries you can cut out. You have to eat. You have to pay rent. You have to go to the doctor. Meanwhile, corporate profits are booming. Companies like Walmart, Nestle, and ExxonMobil have reported record profits. Even as consumers struggle, it's just about profit. How to track your personal inflation? While national inflation rates can give a general sense of the economy, they often don't reflect your real-life expenses. Everyone has a unique financial footprint. Some people spend more on housing, others on groceries or commuting. That's why it's important to track your personal inflation. Use tools like Numbeo, Mint, or YNAB to compare your monthly spending across categories. You might notice patterns like your grocery costs climbing 15%, even if national averages say food inflation is only 4%. Knowing exactly where your money's going helps you make smarter cuts, negotiate bills, or shift your habits to better manage rising costs. It's the first step in fighting back financially. 2. Shop smarter. When prices are rising daily, paying full price is optional if you know how to shop smart. Use tools like Honey, Capital One Shopping, or Keepa to monitor price changes and score discounts automatically. These browser extensions alert you when an item drops in price or when coupon codes are available, often saving you 10 to 30% on purchases without doing any extra work. If you're making large purchases, appliances, electronics, household goods, these tools can save you hundreds over time. 3. Diversify your income. In an unstable economy, relying on one source of income, especially in volatile industries like tech, crypto, or e-commerce, is risky. Layoffs, funding freezes, and market downturns can hit hard and fast. That's why it's smart to diversify your income streams. Start by turning your skills into side hustles. Freelance writing, coding, consulting, teaching online, or selling digital products. Platforms like Upwork, Fiverr, Teachable, and Gumroad make it easier than ever. Even a small extra income stream can offer a financial buffer, reduce your reliance on any one paycheck, and give you more freedom. It's not about overworking. It's about building resilience. 4. Invest wisely. When prices rise and markets fluctuate, the temptation to make fast money grows stronger. But chasing quick returns, especially through TikTok experts, pump and dump coins, or sketchy meme stocks, is dangerous. Instead, focus on long-term, stable investing. Look into low-cost index funds, ETFs, and diversified portfolios that track the market without requiring constant babysitting. These may not promise flashy returns, but they deliver steady growth and lower risk. Make sure your investments match your goals and timeline. Stick to platforms with real track records. Think Vanguard, Fidelity, or Charles Schwab. And avoid anyone promising guaranteed profits. Investing is a marathon, not a slot machine. 5. Report exploitation. If you've been targeted by a scam, Noticed price gouging or seen misleading crypto schemes using fake celebrity endorsements? Don't just scroll past it. Report it. The Federal Trade Commission, FTC, has an easy-to-use tool at reportfraud.ft.gov where you can log incidents. You can also contact your state's Consumer Protection Agency or report fraud directly on platforms like Telegram, Facebook, or Reddit. You might save someone else from losing their savings. It only takes a few minutes, but it makes a real difference. 6. Stay informed and speak up. Economic confusion benefits the people who profit from it. Scammers, corporations hiking prices, or influencers pushing bad advice. That's why staying informed is powerful. Follow credible news, double-check financial advice, and talk to others about what you're seeing. If you notice rising prices, shady marketing tactics, or policy changes that affect your wallet, speak up. Whether it's through social media, forums, or community groups, sharing your experience helps others and creates accountability. A quiet, confused public is easy to exploit, but an informed, vocal one is harder to fool. You can make better decisions, spend smarter, and avoid traps. You don't have to accept this as the new normal. If this video helped you understand what's going on, hit that like button. Share it with someone else who's feeling the squeeze, and leave a comment below. What's something that's suddenly gotten shockingly expensive in your life? Let's talk about it. Thanks for watching. Stay smart, stay skeptical, and I'll see you in the next one.